Hello and welcome to the forum. Every week, we take no more than 15 minutes to discuss the 3 highest conviction ideas surfaced across the Smartkarma network, cutting through the noise and helping you zero in on what truly matters most. The live forum and Q&A session are exclusively available to Smartkarma Plus subscribers. You can always revisit previous episodes on this YouTube channel. Without further ado, let's dive into this week's ideas.
Good evening, ladies and gentlemen, and welcome to the Smartkarma Weekly Forum. The forum is a high-impact live webinar that we host on a weekly basis. We use this to discuss the best, highest conviction insights surfaced across the Smartkarma network. Our customary disclaimer: the forum is meant purely for informational purposes and does not constitute investment advice. It is the opinion not of Smartkarma, but that of our insight providers. Lastly, Chatham House rule applies. Every week, we try and discuss 3 key insights with you as surfaced across the platform. These include large cap names, small and mid caps, as well as core thematics. At the end of the week, we upload video recordings of the forum on the Smartkarma Plus Weekly Forum channel on YouTube. You can use this to catch up on prior forums that you might have missed, and also for sharing them with your friends. Let's take a quick look at what we will discuss today. We will kick off with a mid-cap idea. This is China Education Group. We will then proceed on to discuss a comprehensive list of Hong Kong food and beverage names to play the reopening of that market. And lastly, we will look at probably the most important global theme at the moment, which is the upcoming recession and how to time the market bottom. If at any time you have any specific questions, you can post them using the Q&A button on your Zoom application. You can also post questions at any time on the Smartkarma platform so that analysts can respond to you in real time. Let's kick off with China Education Group. The ticker is 839 Hong Kong. This is a $2 billion market cap company as it stands today. You can see from the share price chart that the price has fallen a lot. We cover the space and the sector very, very closely. Key points here. So what does China Education Group do? They provide private university education services, training services, and also vocational training to students across mainland China. It is actually probably the largest tertiary education player that's listed on the Hong Kong market. Now, the share price has fallen a lot, as you can see, largely in sympathy with regulations that were rolled out across online education. A key point to note here is that China Education Group is an offline brick and mortar operator. It does not have any issues such as those that were surfaced with online tuition service providers. Yet the stock fell in sympathy. Now, what's the crux of the thesis here? First of all, the company is doing really well. They just reported first half results. Profits grew 40%, adjusted net profits grew 20%. The higher education segment continues to do really well. We are noticing increasing government support here as well. There is a lot of visibility on the business because you can see the quota of enrolled students, which then of course translates into revenue over time. The company has also recently announced a 500 million renminbi buyback, which would make it very, very interesting for southbound investors. It is most certainly the best play on China's private education. At the moment, it's extremely inexpensive on just 8 times a PE for this year and falling down to 7.5 times for next year. This is at a pretty sharp discount to all sort of regional and global peers for what is the highest quality, best leading operator. So you can use the current bearish sentiment to pick up really the category leader at really inexpensive multiples. Okay, I'll move on to the second idea today. This is a core thematic. We're looking at the reopening of the city of Hong Kong. This is probably the last market, at least in Southeast Asia, to reopen. We have a lot of case studies here. We can see how things have transpired in India, in Singapore, in other parts of Southeast Asia, and apply the same principles to Hong Kong. Now, one of the core things that we've noticed when we look at the case studies is that there is a lot of pent-up demand for people to go out and eat at restaurants. So the F&B sector is firmly in play. We have started to see this happening in Hong Kong, where the government has recently relaxed some of its restrictions. Now restaurants can be open much later. There are still some restrictions out there, but it is definitely getting easier now. Channel checks on the ground, speaking to people on the ground in Hong Kong, things are certainly livening up a little bit. Now, in this particular thematic insight, we have looked at 34 different companies and shortlisted it down to 8 that are financially in good shape. Out of those, we have further shortlisted down to maybe the 2 or 3 names that we think are really the best. So that list is presented on the right-hand side. Out of all of these, if there was one name you had to pick, it would be Taste Gourmet for us. This is a very, very small company at the moment, but is doing extremely well. They're trading on just 4 times PE. Dividend yield is greater than 10%. It is net cash, and they really have a lot going for it. You can refer to other research reports on Smartkarma, specifically on Taste Gourmet. Even in the current difficult market environment, the stock price is up almost 40 to 50% from when our analysts started writing on it on the platform. With that, I'll move on to the third and final topic today, which is about recession, and it's about how to really time the market bottom. Cam Hui is the investment strategist who's covered this closely. Other strategists, such as Michael Howell from Cross-Border Capital, have been very, very good at calling for such conditions to develop. Now, first things first, recession fears are almost certainly rising, yet stock markets and stock market valuations have not fully discounted recession risk at all. Hence, there is downside. Secondly, based on just where sell-side consensus is on the S&P 500, both on the equity side as well as where bond yields are trading, you're looking at anywhere between 10 to 30% downside on the broad index level before things start to bottom. With this in mind, Cam Hui feels that you won't really see a market bottom till Q3 or Q4, which coincides with the midterm election seasonality of a market bottom in October as well. A key indicator to watch right now is insider buying. When you start to see insider buying comfortably exceed insider selling, that's usually coincides with market bottom as well. We're trying to keep things extremely simple, trying to not overcomplicate it. But this is yet again a reminder where independent research tends to lead consensus sell side by quite a long time, and that's what we're really starting to see here as well. With that, I'm at the end of today's presentation. If you have any last burning questions, you can post them now. If not, again, as I mentioned, you can post these on the Smartkarma platform. You can tag analysts, and you can hope to hear from them quickly and efficiently. Fantastic. I don't see any questions coming, so we're going to wrap up today's forum. Good luck and speak soon. Bye-bye.
That's it for this week. You can find more ideas like the ones we discussed today on demand on our YouTube channel. Remember to subscribe and hit the notification button. If you like these ideas, spread the word. Tell a fellow investor about Smartkarma Plus and follow us on social media. Just search for Smartkarma. And of course, don't forget to visit smartkarma.com for more independent, differentiated investment insights. Thanks for watching and see you next week.